Well, President Xi Jinping was in San Francisco this week meeting with President Biden in an effort to ease tensions between the U.S. and China. Now, in talks with President Biden, Xi raised the issue of sanctions and export controls in the U.S. that the U.S. has put into effect. And now things were left as is, with Biden announcing no plans to consider removing these efforts. Now, Alibaba is saying that these export controls on advanced computer chips, which were expanded in October, are hurting their business and has forced the company to abandon plans to spin off its cloud unit. For more on the business impact of the sanctions, we want to bring in Branden Ahern. He's KraneShares Chief Investment Officer. Branden, it's good to see you. So you're the perfect person to talk to about this. Obviously, with K-Web, with KraneShares, you have a pulse of what's going on, how investors are looking at some of these U.S.-listed Chinese names. In terms of the announcement that we just got from Alibaba this morning, how worrisome is that going forward?
Yeah, it's interesting because yesterday we had Tencent report that they had stockpiled several generations worth of semiconductor chips in advance of U.S. export controls. So it is an interesting move from Alibaba. I think certainly they're very transparent. They're very honest about their business and this potential challenge. And I think it leads to some necessity for clarification from the U.S. government on how exactly they're defining the small yard with high fence. And it's interesting that, as much as we're talking about, Alibaba, but, we're not really seeing U.S. semiconductor companies react, despite China being a very, very large source of revenue for many of these companies, such as a Qualcomm, which, 2/3 of their revenue is coming from China.
So how much of a viable portfolio play is this still, while that is perhaps, at least as Alibaba is citing, one of the kind of headwind concerns?
Yeah, Alibaba's decision to spin off the 6 underlying companies, the six different business units, was to force some of the parts analysis on investors, that they believe that the company is very much undervalued. And they were going to force that analysis on investors by spinning off these underlying companies. So by putting that on hold, some of that I think is due to market conditions. Just the China, Hong Kong market has not had a great year. So it's not a great environment to be doing spin-offs and IPOs. I do think it's very positive the company is doing its first dividend ever. That really proves out their very, very strong cash flows. The company's got $60 billion worth of cash on the books, and a dividend is a strong move from management.
Branden, when it comes to the meeting between President Xi and President Biden yesterday, the tone, at least initially, seemed a bit warmer between the two sides. From an investment perspective, are you at all optimistic that maybe we could see some relief in the tensions between the U.S. and China?
Yeah, clearly all this year, the Biden administration is looking to reset the relationship. We've seen, Blinken, Yellen, Kissinger, Kerry, Raimondo all travel to China. Senate Majority Leader Chuck Schumer and 5 other senators. So there's clearly a effort to stabilize the relationship. And I think there's really strong progress from the 4-hour meeting around further military communication, which is obviously vitally important, but also addressing the issue of fentanyl agreements, exports, stopping that from China, which would be, very, very positive move.
If there is a solid move that comes forward between the two entities, the two largest countries by GDP in the world, when you think about who would be the immediate beneficiaries, either via tariffs that get rolled off or even by some of the intellectual property kind of tie-ups that have ultimately led both of these countries to say to the entities that operate within them, hey, you can't do business with anybody and sell a specific type of chip into this region. Who are the immediate beneficiaries in that instance if we do see some of the tit for tat start to roll off?
Yeah, I think it's a great point that, this kind of juvenile tit for tat, it really jeopardizes the very strong economic relationships, vitally important for U.S. farmers. China is the largest buyer of U.S. agriculture for U.S. semiconductor companies. But look at Apple, right? 20% of the revenue, Tesla, almost a quarter of the revenue. ExxonMobil, more than 10% of the revenues coming from China. So corporations have been getting along with one another quite fine. It's really diplomatically, we've had a strained relationship that really, during COVID, you had COVID babies, but you also had COVID divorces. And unfortunately, the U.S.-China diplomatic relationship went through a little bit of a divorce, and now we're in kind of proverbial marriage counseling at the moment.
I like that analogy. Branden, give us a better sense of what exactly is going on with China and its recovery in terms of the latest data that we are getting out of China, showing that it's holding up maybe a bit better than some had feared up until this point. What do you think that then looks like looking ahead to 2024?
Yeah, I think it's always important investors recognize that the last recession in China was in 1993. So this apocalyptic collapse of China, I think it's a false narrative. At the same time, China is having a very, very slow recovery coming out of the removal of zero COVID. This proverbial scar tissue, the effect that zero COVID policy had on consumer confidence, consumer spending is incrementally, very slowly unwinding, but it's really led to this tepid recovery. Yes, it's a recovery. It's just not a pull the Band-Aid type of situation or flick the light switch where the economy is just back to normal. It's happening very slowly due to this scar tissue on zero COVID.
Branden, really great to get your insights and analysis on this. Branden Ahern, who is the KraneShares Chief Investment Officer. Appreciate the time.
Thank you.